All right, let's get started. So, in this video, I'm going to be talking about how you are a casino owner and not a trader. All right. And the reason why I wanted to make this video is because I realized that trading has a rat race. We get out of the corporate rat race, the 9 to 5, working 40 hours a week, renting out our lives to other business owners, right? And we want to get out of that. And then we picked up trading so we can work for ourselves, work 1 to 2 hours every morning, extremely scalable business, and you can do it anywhere around the world, right? So at that point, you're already sold. So you're like, okay, let me relieve this rat race. And the moment I start trading, I'm finally out of corporate. I'm out of corporate America or out of corporate wherever you're from, and you're out of the rat race. But trading has a rat race, meaning that every time you go on social media, you see all these successful traders, and it's a vanity play every single time. Well, for the most part, not every time. There's some good trader content creators out there that I actually like, right? But for the most part, it's always people who are trying to predict the market, who gets ego strokes and vanities from preventing the market, showing like the golden signal or the golden, indicator or whatever. But the fact of the matter is, trading is more so, you have to treat trading like a casino and not like a fucking market mover or market maker. Your indicators and your technical analysis is not the reason why the market is moving. And I know you're going to say, oh, I know that already, but you're not acting like it. Because if you did, then you wouldn't over leverage. You wouldn't overtrade. You wouldn't revenge trade. You wouldn't go until you wouldn't do all these different things if you actually believe that. Because if you did believe that, then you would know that the market is completely random, and no matter what your indicator says, there's a good possibility that you will lose. Okay. So I just want to start this video off by letting you guys know to completely sever and disconnect your attachment to what the market is doing. Like, really just fuck trying to figure out why it's doing what it's doing. That doesn't matter. Attach yourself to your controllables, which is your entry criteria, your stop loss criteria, your take profit criteria, your risk management, your entire methodology, your entire system. You need to attach yourself to the controllables in which you control. So depend on yourself, depend on your own agency, and completely disconnect yourself from the markets. When I hop on the charts, I don't really give a fuck what the market is doing. All the market is a bunch of upticks and downticks, bro. That is completely it, right? So an analogy, and I had to write this down, an analogy that I found, which was like very good in the sense of what I'm saying is, imagine if you're checking your weather app on your phone and you think that your phone is the reason why the weather changed. You see what I'm saying? Like, your charts are nothing but a thing that you use, or a display of an image to reflect what the market is doing, not the reason why it is driven. So unless you know these market makers personally, unless you was in the meeting, unless you know exactly why they did it at the time that they did it, then you don't know why the market is moving. So therefore, you're setting yourself up for failure. So fuck that shit. And don't worry about why the market is moving. You need to make sure that you check off your boxes one by one, okay? So you got to realize your entire existence as a trader is to basically worry about how well you executed your system and playing probabilities. You see this one pattern that makes you a little bit more than it loses you, and that's the best that we can do because we don't know why the market is moving, okay? Technical analysis is, in my definition, is nothing more than a visual aid, a graph, a chart, something visual that we can see, in which we use to determine the quality of this pattern that we found that wins us a little bit more than it loses us, to use as an edge over and over and over again. Because we don't know why the market is doing it, we got to kill the predicting shit, right? But we don't need to know why the market is doing it. We just need to see this continuous pattern, and therefore we're playing probabilities. Thus why we are casino owners and not traders, not market movers, not market makers, any of that. I hope you see the correlation there, right? So I wanted to ask you guys a question before we get started. And the question is, You wake up in the morning or nighttime if you trade Asia, whatever. So you come into your trading session, you put the charts up, you're getting yourself ready for the trading session. You're bringing up your journals, your journal template, and you're getting ready, whatever, right? I want to ask you, are you trading? Oh, sorry. Are you trying to predict where the market will go next, or are you evaluating the quality of your edge and probabilities behind it? Okay. So I wanted to ask you guys, are you trying to predict where the market is going to go next, or are you evaluating the quality of your edge and the probabilities behind it? Sorry, I had to cut the camera. I just sneezed. But answer that in the comments for me. I'll give you guys a couple seconds. All right, couple seconds. Now, what I'm going to show you guys in this video is the fact of the matter is we cannot, okay, so there's no difference between a consistent trader and a successful trader. If you have a edge with a positive expectancy, meaning it's going to make you more than it loses you, then at that point, all we need to do is to remain consistent and allow that edge to emerge over thousands of trades. And the more we trade, flawlessly executing that edge, the more the edge emerges, therefore the more money that will compound, leading us to success. Okay, so consistency is no different from a successful trader. They are interchangeable as long as you have a positive edge. But the only thing that can fuck up consistency are your emotions. You are the weakest link after you find a edge that has a positive expectancy. So there's something that that I created called the house rules. The house always wins. The reason why I called it the house rules is because of a few things, right? When you walk into the casino, for the most part, the house always wins. So us being casino owners, we need house rules. And then another reason is, I don't know if you've ever been to a friend's house or a relative's house and you guys are playing like Uno or some type of game with different rules. And in order for you guys to agree upon what rules you're going to go with, you got to go with the house rules. So for me, if you're at my house and we're playing Uno, whatever, you guys got to abide by my rules because you're at my house. So this is like a form of ownership and taking control and ownership over your trading. Okay. So the house rules, there's 12 of them, and we're going to go through each one of them one by one. So the first one is your trading strategy equals the casino game rules. Okay. So what I'm doing here is I'm going to directly correlate trading with, the casino and how they make money and make billions year over year. Okay. So your trading strategy equals the casino game rules. All right. Casinos win because words are hard. Casinos win because every game has rules that favor them. Whenever you're playing roulette, for example, right? You play roulette and they have that green 0 and the green 00. That's their edge. Okay, so their edge is already inherent into the gameplay, so they don't need to do anything. Okay, it's the same thing whenever we place a trade. The moment we enter the trade, the edge is already there because we placed the trade. You see what I'm saying? So casinos win because every game has rules that favor them. Your trading system is the exact same thing. Create rules that tilt probability in your favor. Tilt the probabilities, don't go on tilt. Okay, the rules create an edge, not prediction. We are not in the game of predicting. We're in the game of executing our edge at a very high level, flawlessly, with very high standards. Okay, point blank, period. So going on to number 2, right? I'll leave number 1 open for you guys. So going on for number 2, your risk reward ratio equals the house edge percentage. Casinos profit because blackjack has a 0.5% to 2% edge. Roulette has about a 5.2% edge, right? 2.6% edge. And then, for example, for me, and I just use my edge, your 2R strategy with a 50 to 60% win rate is ridiculously higher than the casino's edge. So how the fuck can you not execute this, knowing that 50 to 60% of your trades over a large sample size is going to be winners with a 2R, meaning you're going to win double the amount that you lose on the other end, your loss rate, which is 50 to 40%. And I'm going to touch on the loss rate thing because I always hear people talk about win rates, but everybody ignore loss rates. right? When have you ever sat down, looked over a sample size of your trades, let's say your last 100 trades that you've taken, and made sure that your loss bucket was full? Because the fact of the matter is, if I have a 50% win rate and I take 1,000 trades, 498 of them might be, winners, and then 502 of them might be losers. I have to make sure that that losing bucket is getting full, because how the hell can I get 50% of my wins and not have 50% losses? Like, where does that other 50% go? Like, I understand that you guys probably know what a win rate is, and that you got to reach it, and like, oh, I'm only going to win 50-60%, but you are treating it as if you need to win every single trade, because whenever you lose, you pretty much go into an emotional state. You feel me? Like a negatively emotional state where you have to contribute to that loss bucket. Those losses can't just go out the window. They can't just not exist. You can't avoid taking a trade to avoid a loss, because avoiding a loss is the same thing as avoiding a win, because the moment you take a trade, losses or wins are already wrapped up, and the only thing that signals if it was a win or a loss are your stop orders, your take profit or your stop loss, okay? But they are the same thing. You never know which one is going to hit. So therefore, you got to take every single properly presented or flawlessly executed trade, or whatever, high quality trades, and flawlessly executed. And you got to take every single last one, because you just don't know which is which. And then over a series of trades, you go back and you look, let's say, like, every 100 trades, you go back and look and be like, okay, let me make sure that it's around 50-50. And if it is your edge is working, bro. So the more high quality trades you take, the more your edge emerges, compounding profits the same way a casino does, okay? A casino is not worried about the demographics that comes into the casino. They're not worried about why these people are gambling. They don't care about any of that. They are not market movers and market makers. But what they do is they make sure there's no window, so you don't know what time it is. They make sure they put fresh oxygen, right? They make sure that they don't bring up any clocks, so you don't know how long you've been at that table, right? They make sure that they have little waitresses walking around giving you drinks to get you drunk. They are dialed in on the things that they can control to put the odds in their favor, to keep you at that table long enough to keep playing those games and increase the number of hands being played, so their edge can emerge and they can win, right? So, and we're going to talk about that and the opposite of that, because the more trades you take, the more your edge emerges, which means the bigger the gamble, the less your edge, emerges, which means you're going to be at a disadvantage. All right. So, expected value. The casino's guaranteed long-term profit, right? So the question here is, why do you think investors invest millions, if not billions, into a casino where they can't control the outcome of each hand? Think about that. Like, imagine investing millions of your dollars into a business, into an establishment where you cannot control the outcome of each hand. Once the dice is rolled, once the ball is rolled, once the hands are played, you can't control that. Why are they so confident in putting up millions of dollars? Why you have like a 50K account that you spent $50 on or whatever? These people are putting millions of dollars in their own money into these establishments, not knowing the outcome of their trades. Why are they so confident? All right. So the reason why is that casinos lose individual hands but win the month, because their expected value pulls them forward. All right. So trading is identical. A trading system with a positive expected value guarantees long-term growth despite short-term randomness, which is those wins and losses per trade that you guys trip over. And then traders get so caught up in each outcome, they can't witness the gift waiting for them at the end of the month. Think about that. All right. Really think about that. So both are businesses built on long-term math, not short-term outcomes. So the fact of the matter is, and I've talked about this before with one of my traders, and also if you are looking for a trading coach, click the link in the description. Go to that link at strongtrading.com and apply for one-on-one coaching, and you'll have either me or Tanner coach you. But anyway, so I was telling one of my traders that because day trading, right? Day trading, we're only holding a position for a limited amount of time, which makes it feel like, a short-term game. But day trading is really a long-term portfolio. Okay. So don't confuse the quick buying and selling with, it being a quick game or a short-term game, or this is just a gamble or a side hustle. Like, no, this is a career. This is an occupation. This is a business. Like when you go into a job, you sign up for a 401k. Well, I'll say a career, not a job. If you go into a career, you're signing up for a 401k and accepting stock options because you're going to be there until you retire. You need to have that exact same mindset when you trade. All right. Don't confuse these short-term holds for this being a short-term game. This is a long-term game. Okay. All right. Number 4 is trade outcomes equal game rounds. Okay. Each trade outcome is a game round, each hand played, each dice rolled. Okay. So the casino, each spin is random. Trading, each trade outcome is random. There's no difference. The power is not in one trading outcome. It's in flawlessly repeating your edge thousands of times. All right. Like detach from each individual outcome because it's exhausting. It's exhausting. You win one day, think you're fucking Warren Buffett. You lose the other day, think that you should have never been fucking born. Like, do you know how exhausting that is? Like, you don't want that, man. Just place the trade, detach from it. Just know you did everything that you possibly could to put the odds in your favor. And if it didn't work, then that's cool. And if you do fuck up and commit a trading error, guess what? Take a step back. Talk to yourself as if you're talking to a friend. If your friend hits you up and say, yo, I just messed up. I just had this bad day. I fucked up. I normally don't do this. You're going to be like, listen, bro, just relax, chill out. You know what I'm saying? Go get yourself something nice to eat. Whenever you experience a red day, your red day routine should turn your negative energy around. So make sure each red day is a self-care day. Shout out, damn, I forgot his name. My bad, bro. But shout out my guy who gave me that advice. All right. So going to number 5. Position sizing is the table limits whenever you go to the casino. The casino always have a table limit. They will never let you, if you're like a multimillionaire, they will never let you go in there and, put $5 million on black. Because if you hit and then you walk out, that's a L on their rap sheet. Okay. So you do not want to over leverage. You want to keep your position sizing small and then take a shit ton of trades, not have one big position size and take one trade. That is how you lose the game of being a casino owner, of owning a casino, of being the house. All right. So casinos cap max bets. So one gambler can't bankrupt the house. All right. And they're not going for these home runs. That's basically what this is saying. Like, yeah, they could be like, hey, no cap, like no max bet, right? Bet as much as you want. And they probably could come up, right? But they want to keep the odds in their favor. They would rather 1,000 base hits than, I don't know, like 5 home runs or 10 home runs. You know what I'm saying? So it's just not worth it. All right. So traders cap their risk per trade to protect the account. Same difference. The goal is to stay in play forever. This is an infinite game. A lot of us go into this infinite game with a finite mindset, which I understand because we all grew up playing sports, right? We all grew up trying to win or lose. Our value as people are always determined by success and failures, and not growing up being conditioned to know that failure is added to the wall of success, right? There's bricks of failure that build up a success wall. Like they're intertwined. Does that make sense? So the goal is to stay in play forever, right? Don't think of this as winning and losing. Think of this as a game of survival and living forever. When it comes to relationships, life, business, all of these things, trading, those are infinite games, right? The reason why Apple, Microsoft, Amazon, all these companies acquire other companies is not only to eliminate the competition, but make themselves so big that they can live forever. Whenever you're in a marriage, the whole goal is to death do us part. You don't want a divorce. The whole point of war is to pretty much stay alive long enough for the other country to pretty much go back home or retreat, right? So the whole goal is to stay and play forever. You don't want to blow the account. Even if you trade pretty shitty, even if your edge isn't as lucrative, if you stay alive long enough, you will make money. Okay. So risk management keeps the edge alive and prevents one event from destroying the entire business. Keep that in mind. Remember, you're not predicting, you're executing your edge. Over leveraging means you're coming from probabilities to certainties, which is impossible. Every time you over leverage is because you were convicted that the market was going to do something. And there is no way that you could possibly know that the market is going to do something because you don't know the market maker. You're not the market mover. You don't know the market mover. You don't know why they're doing it, at what price they're doing it, when they're turning around, when they're going up, when they're going down, when they're going sideways. You do not know unless you can tell me exactly who is doing it or the people that are doing it. You do not know, which means there are no certainties, which means you should not be over leveraging and always have in the back of your mind that you could possibly lose. That you could possibly lose. All right. I was flowing. My bad. All right. So stop loss equals casino max loss per round. The casino defines. Yeah, that's the word, defines how much they can lose each round. Your stop defines how much you can lose per trade. Controlled losses guarantee survival. Most money is made in the losses. This is something that you need to realize. Most money is made in the losses. Most money is made in the losses. Most money is made in the losses. When I had my most lucrative, my most profitable months, it wasn't because my take profits were hitting. It's because my losses were smaller. Okay. Like if I wanted to go from a 2R average to like a 2.5R, I won't necessarily adjust my take profit for the market to extend itself to my take profit. I would probably scale out a drawdown. Okay, so think about that. Like if you want to make more money and you want to be successful, you want to go ahead and stay at your post as the risk manager, as the person who controls losses. The market will take care of your profits, right? I was watching this video about Oliver Velez, and one thing that he said was the market takes care of the profits because the market doesn't know when to stop. Once the market starts trending, that shit just keeps on going. All right. It just keeps on fucking going. So if you caught the right direction, then you have nothing to worry about for the most part. But if you're on the wrong end of the trend, then your job is to cut that shit because the market probably won't turn around anytime soon, depending on what type of trader that you are. Right. And I forgot the saying, but it says something along the lines of the market could be irrational a lot longer than you can remain solvent or keep your cool or whatever the case may be. And that's why, because the market is like a kid with a temper tantrum. The shit doesn't stop. It's just going to keep on going. If you catch the right side of things, yeah, shout out to you. Let it do its thing. But if not, you need to cut it, man. All right. Oh, and another thing, I was reading this book, Value and Price Analysis by Anna Culling. And one thing that she said is like the market is like an oil tanker truck. You never really see an oil tanker truck make a U-turn, like changing trends, like switching the direction. Like you never see an oil truck just do boom, like a straight U-turn. Normally it's like a 4-point turn before they start going. You know what I'm saying? So just understand that the market is going to have to go through a lot before it changes the trend. Meaning if you're on the wrong side of things, you're going to have to wait a long time before it even, if it even goes back to your entry. So it's just better to cut the loss, save your time, save your emotions, save your capital, and wait for the next opportunity. All right. Number 7. Journaling and data equals the casino's accounting systems. Listen, the casinos, they track every metric, their wins, their losses, volume, payouts, player behavioral habits, and environmental edge, right? And traders, we track our win rate, our risk to reward ratios, our drawdowns, setups, trading errors, environmental impacts, mental and emotional states. There's no difference, right? Data strengthens the edge, prevents surprises, sets proper expectations, and exposes leaks in your system. Okay. So I wanted to touch on prevent surprises. A lot of us, the reason why we go on tilt and we, get super emotional. I think there's a fly in here. The reason why we go on tilt and we get super emotional is because we get caught. Yeah, there's definitely a fly in here. We get caught by surprises. Okay. You do not want to get surprised by the market. always ask yourself, and we're going to get into this later on, how much am I willing to lose to figure out if this trade is going to work into my favor? Because you are acknowledging the loss, you are acknowledging the win, you're acknowledging the risk that you're taking, and you're going to ask yourself like, yo, is this worth it? And if you can ask yourself and tell you that when the straight answer is yes, when you lose, hey, I would have did that over again. I did everything that I possibly could. I put everything on the table. I did everything that I could, and I'm good, bro. And you should be okay with that and learn to let go instead of thinking of it as every loss is a mistake that you made, that you fucked up. You did not. If you feel like you messed up based off of a random outcome that actually contributes to your loss rate, and your loss rate actually contributes to your win rate, because you can't have a 50% win rate without a 50% loss rate. You can't have a 70% win rate without a 30% loss rate. You see what I'm saying? Like, you can't have 70% and 0%. Like, you got to lose that 30%. We got to make up 100%. You see? So, kill all surprises, right? One of the things, and that's for the technical and the methodology aspect of killing surprises. Another thing is building trust with yourself. There is nothing scarier than going onto the charts after a long string of trading errors and, impulsive decisions that you've been making to a point where you don't trust yourself and trust that you'll follow your system. You're scared of yourself. So every time you get on that chart, you're like, fuck, I don't know what I'm going to do next. You need to make yourself predictable. You got to build trust with yourself. If me and you were in a relationship and you were my dog, or you were my girl or whatever, we're building trust by spending more time with each other, being honest with each other, and most of all, when we're in drawdown or a situation passes, a tough situation, how do we respond? Do we hold it down? Do we stick with each other? Did we give each other the benefit of the doubt? Did we come from a place of understanding? Did we come from a place of love? Did we come from a place of like, like if I was in your shoes, or I understand? Can you look at somebody's decisions and be like, okay, that decision was crazy, but what options did that person have? You see what I'm saying? So build self-trust with yourself in the same way that you would build trust with anybody else, but on the charts, okay? Every time you violate your rules, it's not you trying to make money. It's you killing your own self-confidence and self-trust and all that, all right? That's way more pricey, and it's not worth the money, all right? So, your own dignity and how you look at yourself is worth way more than money. So remember that. Number 8, overtrading equals letting gamblers play how they want. Okay. Casinos never let players choose crazy custom rules. All right. They'll get banned or thrown out of the establishment. They won't be able to play unless they play according to the casino's rules. All right. And that goes on to say, when I talk about trade on your own terms, if you're going to pay commissions and fees, because trading is a negative sum game. It's not a zero sum. The moment you enter the trade, you got to pay the brokerage. So it's negative sum. You already started out in the hole, even if it's like negative $2 or $5, right? So whenever you're going to pay commissions and fees, you need to make sure that the market is aligning with your system. They got to play by your rules if you're going to pay a commission and fee. You don't sit here and tip a waiter or tip a server just based off the fact of them doing whatever they want. Like, no, you tip them because they took care of you, because they met your needs, because they heard you, and they got you everything that you needed in a timely manner. And you're like, you know what? You had a good attitude. You gave me everything that I needed. I'm going to give you a tip, right? So you need to trade on your own terms. Don't go into the market as a beggar trying to scrape a little bit of money and I just need a little bit and I just want to retire my family. Like, no, you come in there, chin up, chest out, you feel me? And the market has to give you what you're looking for, or no game will be played. Period. They're going to give you a whole meal because you're not accepting scraps. So overtrading is you letting gamblers, your emotions, create chaos in your system. Consistency protects the math. Emotions disrupt consistency, and beliefs decide what emotions are chosen based on events, actions, or conditions. Consistency protects the math. Emotions disrupt consistency. Beliefs decide what emotions are chosen based on events, actions, or conditions. Consistency protects the math. Emotions disrupt the consistency, and your beliefs decide what emotions are chosen based on events, actions, or conditions. Please understand that how you perceive the market and how you perceive events and how you perceive conditions and actions is how you will get emotionally aroused, and that will choose, and your beliefs and your perception will choose which emotion comes out. If you take a loss and you get angry, it's because you perceive that loss as what, like maybe, you're taking a step back away from becoming a millionaire or whatever you want to do, right? You view every loss as a step away from where you want to be, instead of viewing every loss as a contribution to your loss rate, as a door to walk through to get to your win rate, to get to your wins. And that's all a loss is, right? You got to walk through that door to get to where you need to go. All right. So number 9, emotional trading equals a casino changing rules mid-game. That's nasty work. Casinos don't panic after a big losing night and rewrite the rule book. All right. So if somebody came into casino and made $1 million, Mickey Mays go in there and make $3 million, $5 million, $10 million in a week, they're not going to rewrite the rules. All right. They're going to stick to their edge. They're just probably going to ban him, which is crazy. But traders shouldn't panic after a losing streak and abandon the system. All right. Stay true to your system. If you know that it has an edge, you got to stay true to it. And we're going to talk about a chart. There's this chart that I have on the next page that we're going to go through. And this chart shows you the percentage of the likelihood of consecutive losses based on your win rate. And that's going to eliminate the surprise. So for example, if I have a 55% win rate, and I'm going to show you, but if I have a 55% win rate, there is like a 97% chance that I'll have 5 losses in a row. And if I understand that expectancy and I, accept that expectancy, that loss expectancy, then I shouldn't be emotional about it, because I know, like, I'm not saying that I wouldn't be like, man, this is stupid. Like, I'm not saying that I wouldn't be like, bothered by it, but to act on it is something completely different. And to accept it is the next level up. Where you're like, okay, cool. At least I know shit is working. So, consistency is what makes probability work. Doing the same monotonous thing over and over again take the excitement out of trading. If you're excited during your trades, you are probably over leveraging and chasing that dopamine. Okay. So you want to do the same monotonous thing every single day, until you're perfect at it, till you master it. Okay. Every journal that you make for every single trading session should be almost the exact same thing. Even the issues that you're having should come down to 1 or 2 trading errors that, just align with your psychological makeup, who you are as a person. Those trading errors are directly connected to who you are as a person. You probably just had it your whole life, but even those should be the same errors that you are keeping in the forefront of your mind every single time you get into a trading session, because those 1 or 2 errors is what's causing 90% of your issues. And if you can create actionable steps and a game plan every single day to combat those trading errors, then over time, it will become second nature to trade properly, and you will reap the benefits, So number 10, trade frequency equals casino game volume. Okay. So casinos maximize the number of hands being played. More rounds equals the more your edge will emerge, contributing to your bottom line. More rounds equals the more your edge will emerge, contributing to your bottom line. Okay. I got to say it a third time. Sorry. More rounds equals the more your edge will emerge, contributing to your bottom line. All right. So please understand that your edge is in taking as many fucking trades as possible. And if I want to be direct, and I'm going to jump straight to it, you basically have this basket, and this basket is where you put all of your apples. When you go out to pick apples, you want to hand pick them and choose the best apples that you possibly can, because one spoiled apple, one rotten apple can fuck up the entire sample size. So have some standards, right? Like going to the session, you don't have to be the super disciplined trader. You just got to be somebody with standards. Pick high quality trades because you're a high quality person and you don't settle for less. And put these apples in the basket to a point where if you dump the whole basket out and you can see all the trades that you picked, they were all beautiful. All right. Be an artist. Be an artist. So the only way is to win through consistency, not random bursts. Same risk, same setup, same instrument, same execution, same methodology. Have a high standard by handpicking beautiful, high quality trades to add to your collection. Every great trade you choose Every great trade you choose strengthens your edge and helps it show up at its highest level. And that's the point. You want to give yourself the highest odds of your edge emerging by selecting the highest quality trades, because you are a high quality person and you're not going to settle for bullshit, and you're going to trade on your own terms, because you're not going to take the scraps that the market is going to give you, because you are not a beggar and you are of abundance. You're worth it. And every single thing that you're going to take and accept from the market is going to be high quality and beautiful trades that you will add to your collection. All right. So number 11, let me check to see if it's too dark in here. Is it too dark? No, I'm good. Cool. So number 11, market noise equals casino. Casino words are hard. Market noise equals casino randomness. All right. The outcome of a card. The outcome. And I'm not right. Let me correct this. 1 second. The outcome of, I don't know, cards being dished out or something like that. Cards being dealt. That's what it is. The outcome of cards being dealt, the dice roll or a spin, is unpredictable. Each candle, sweep, or trend change is unpredictable. You're not a market mover nor market maker. Prediction is irrelevant. You're a casino owner. Probabilities is everything. The fact of the matter is, if your risk is proper, then you could take as many fucking trades as you want. All right. And the more trades that you take and properly and flawlessly execute, the more your system will emerge. Your goal is to take as many flawlessly executed trades as possible. Now, this is where the disconnect comes in at, because the goal of the game that we're playing when we're playing a game of probabilities is the fact that we want to take as many trades as possible. But the thing that gets in between that is the fact that our mental energy cannot take as many trades as we want through the day. Also, quality of trades as well, right? So if you have a high quality trade or high quality setup, that's probably going to present itself probably once, twice. We'll be lucky if it was 3 times a day, right? And we're only accepting that. And then the second thing is, there's only but so many decisions that we can make in a day before our decision making quality starts to decline. All right. And we run out of mental energy. And then once we run out of mental energy, because a lot of times mental energy is really the wall that's holding back the emotions from seeping out before you go into tilt. Okay. So every time you make a decision, every time you focus on every single tick, every time you try to focus on the noise, which is price action between your stop loss and take profit, and looking for invalidation, and worrying about how the market gets to one of your destinations. And the more focus you're putting on all of these irrelevant things, because whatever's going to happen was going to happen anyway, you start to lose mental energy. And then at that point, emotions start coming out, and now you're on tilt, not because you're a disciplined trader, not because you're not a disciplined trader, but because you're mentally exhausted. And discipline is never the problem, okay? So the fact of the matter is, I hate when people say that they just need to be disciplined. Disciplined is nothing more than an action or an act that you take for change, all right? If there's something that you need to do, but there is internal friction and you don't want to do it, there's like internal resistance for you to actually do something, you just need to be disciplined long enough until that friction resides and you change your identity. Discipline is nothing more than an act or an action of change of identity, right? So if I go to the gym every day, that doesn't require discipline. I just go to the gym. That doesn't require discipline. Discipline is not the issue. Even when you're trading, right, and you're committing trading errors, you are just a unprofitable trader or an unsuccessful trader. That didn't require discipline. That's just who you are. It's the same thing on the other side of things. You won't need discipline once you're a successful trader, because that's just who you are. So you don't need to be a disciplined trader. It's just the act. Discipline is nothing more than the act of change of your identity. So therefore, there is no internal resistance for you to do something on a consistent basis. So what we're doing here as a whole is making you a casino owner as your identity. So therefore, you don't need to guess the market or do anything that is impossible to do. Like, you trying to do all of these things and guess the market and all this shit and trying to predict and all that ego stroke of being right and shit like that, you are literally asking yourself to do the impossible. You cannot sustain that. Okay. So, number 12, your mindset equals casino owner. Your mindset equals casino owner versus gambler. You get to choose. All right. So casino owners think in probabilities and systems. They make their own luck and they're not hoping. All right. So if you catch yourself hoping, if you catch yourself praying to God, if you catch yourself doing all these things, then you are not a casino owner. You are a gambler. You have let this situation get out of your control. You have stepped out of your controllables, and now you're just on tilt and you're fucking up. All right. So gamblers chase outcomes and emotions. All right. So you need to ask yourself, are you thinking in probabilities and systems, or are you thinking in outcomes and emotions? All right. So gamblers are victims that feel like nothing never goes in their way and everything is against them. I'm not going to lie. I used to have that mentality. I used to lose so many trades, bro, that I'm just like, dog, there are supernatural forces that are literally on my head right now. Like, I don't know if it's God. I don't know if it's the universe, but you're on my head right now. Like, I'm doing all of this. And what makes it so bad is because the reason why we're trading is justifiable. You know, financial freedom. I want to be able to live my life the way that life is supposed to be lived. I shouldn't be slaving at a 9 to 5 or working these jobs and stuff like that. And I want to spread this, you know, this abundance and this wealth to my family so they can be relieved, or my loved ones so they can be relieved. It's all justifiable, but that's not enough. Having a justifiable reason for your trading errors is not enough. The market doesn't give a fuck. Okay. So you got to understand that you have to make your own luck. You got to stop hoping, and you need to depend on your own agency and free will to do exactly what you need to do, because you will reap the consequences of your decisions, and there is no safety net. You know, so traders win only when they adopt the casino owner's mindset. You will only win once you fully rely on your own agency and trust your system with your life. Let's look up the definition of agency. Okay, so boom. Where is it? Action or intervention, especially such to produce a particular effect. That's pretty much it. But right here, this is what it is. The ability to make decisions and act independently. That is the definition of agency. Okay. So you have to rely on your own agency and trust your system with your life. A lot of you guys want to be full-time traders, but the fact is you want to be a full-time trader, but you don't trust your system. You got to be able to trust your system with your life, because if you're a full-time trader, basically what you're saying is, I want my trading system to make me enough money to pay for my rent, to pay for my car, to pay for my food, to feed my family, to pay for my clothes, to pay for my shoes, to pay for my entire cost of living, but you won't trust it with your life. You keep interrupting your trades. You got to be able to have that much of a trust with your system if you want to be a full-time trader, because you're trusting it with your livelihood. You're trusting it with your cost of living. If that system does not provide for you or grant you provision and give you the money for the provision, then, well, God gives you all provision. But you see what I'm saying? If that system does not grant you any provision, then you're fucked. Okay. And it goes on to say that's another reason why you guys can't be successful traders, because money is looked at as survival because it requires money to eat and to have shelter, which I fully understand. But there's a paradox here where you can't give a fuck about the money, even if your livelihood relies on it, because trading success is not something that you create, it's something that you attract. And a lot of times, if you're pursuing something like a car, or like a cop car pursuing a robber, like the robber is going in the opposite direction. So in order for you to pursue, something has to be going away from you. Okay. But in order for you to receive and get something, you have to create an environment that's attractive. If you want bees to come, pour some honey out. Don't go chasing a fucking bee. You'll never catch it. You see what I'm saying? And if you don't catch it, and if you do catch it, you might catch 1 or 2 bees out of like 1,000. You see what I'm saying? And it's just not worth it. So just know you need to trust your system with your life. You need to fully rely on your agency. And by you making your own independent decisions every single day, you are creating an environment where the market can grant you provision and financial freedom. Okay. Now, trading is predictable. Math is what makes trading predictable. A lot of us are afraid to trade because we think it's just so random, but it's only random on a trade by trade basis. But over a large sample size, it's very predictable. And that's why Investors invest millions and billions of dollars of their own personal money into casinos because the expected value, the math, is reliable. Everything in our entire existence is based on math. Math is the universal language. Music is a universal language. And I could probably say that they're the same thing. I don't know, but it would make sense to know that they're the same thing based on like frequency and all that good stuff, right? So math is what makes trading predictable. We go on tilt because we desire guarantees, and certainties. We can't get that from the charts. Only the math that lives inside our edge. We go on tilt because we desire guarantees and certainties. We can't get that from the charts. Only the math that lives inside our edge. We go on tilt because we desire guarantees and certainties. And we cannot get that from the charts. Only from the math that lives inside our edge. All right. So I'm going to go over a few things that I want you to attach, I want you to attach yourself to attach. If you got to attach your identity or your emotions to something, I want you not to attach it and detach it from the outcome of the trade. And I want you to attach it and trust the math of your edge. All your certainties and guarantees can be connected to the math. That's reliable. That's not going to change. That's a universal law. That's a universal language. That's a universal code. Math, nothing beats it. Okay. So the first thing that I want to talk about is law of large number. Your edge only becomes reliable after a large number of trades. Okay. One trade is random. 10 trades are still noise, but after 50, 100, 500, 1,000 trades, the true win rate and risk reward ratio of your system starts showing up consistently. Okay, we're playing a numbers game here. That's all life is a number game. Don't think of it let's say like this. Let's think inverse. How I would like for you to think when it comes to trading. I want you to get rid of, 100 wins will make me $10,000. Throw that out the way. Stop trying to collect as many wins as you can. Stop trying to go on green streaks and all that shit. What I want you to think about is this. If you were a salesperson and I told you every 100 no's will equal one yes, how many no's will you try to get out the way if you knew how many no's equaled one yes? You would probably try to collect as many no's as possible. Try applying that trading to logic. You figure that out, you figure the streets out. All right. So probabilities need volume to become visible. You need to increase the amount of trades that you take only if you can mentally handle it. So now you have to go back and realize at what number trade each session, right? Before you start making bad decisions and be honest with yourself. Me personally, I used to do one trade per day and I stopped as of recently, but I used to do one trade per day and that was my most profitable months. That's when I mastered my system. That's when I knew what high quality looked like and what low quality looked like. I would annotate on my charts. I would circle what low quality, what part of my system, like step by step. Oh, this is low quality step. I'm not going to accept this. I'm going to wait, right, for high quality. So I know what low quality is. I know what high quality look like. I can describe it to you. It's like the lady in the red dress. I know what it looks like. It's like I'm Neo. I can see the agents, So here's some actionable steps for the law of large numbers and trusting in probabilities and trusting that this is a numbers game. Track every trade the exact same way. Okay. Every time you journal, it should be looking the exact same thing. It should not be big dramatic changes in your setup, your trades, your annotations, your markups, all that. There should not be big dramatic changes, or your P&L will go through big swings as well, right? It's all relative. Evaluate your system every 20, 50, then 100 trades, not daily. Stop worrying about those streaks. Stop worrying about today's red or green. Wait till the end of the week. Wait till the end of the month. Wait bi-monthly. Wait semi-annual. Wait annual. Okay? This is a long-term portfolio. All right? So avoid switching strategies before hitting 100 trade sample size. Me personally, I've always been an advocate. I'm just giving you guys a break right here. But me personally, if you want real consistency and real success, 1,000 back tested trades. And it's not even just to see if the setup is going to give you a certain edge. For sure, that is a part of it, but it's for you. It's for you to be able to witness drawdown and then getting out of that drawdown, which increases the trust in your system, which you'll need if you want to become a full-time trader. All right. Focus on consistencies, the same setup, the same rules, the same risk. All right. Number 2, grow statistical confidence. All right. So you need to witness your trades get you out of drawdown to trusted, smoothing out your emotional volatility, leading to consistency. All right. You need to witness your trades get you out of drawdown to trusted, smoothing out emotional volatility, leading to consistency. You need to witness your trades get you out of drawdown to trusted, smoothing out emotional volatility, leading to consistency. There is no difference between a consistent trader and a successful trader, but the only thing that can disrupt consistency are your emotions. It could be based on you having a bad day. It could be based on your environment at the time. It could be based on like you could wake up on the wrong side of the bed. Emotions fuck up consistency, which will make you an unsuccessful trader, right? And you need to be able to trust your system so much that when you're in drawdown and it looks bad and the situation looks bad, you keep on executing. There was this one time I had a 4-day losing streak, and I just wanted to say fuck the one trade a day thing, and I just wanted to do what I could to get green again and do anything that I desperately can to get green. That's all I wanted to fucking see. At what cost, though? At what cost? I would just be showing that I don't trust my system. And if I don't trust my system, then I can't trust my system with my livelihood. And if I can't trust my system with my livelihood to pay my bills and all that type of stuff, then at that point, I would never become a full-time trader because I don't trust my system enough to pay the bills. When I'm in drawdown 1 month and rent is coming up, am I going to trust my system and keep on executing? Or am I going to do whatever it takes to get green and end up blowing up? Think about it. All right. So here's this chart. And this chart is what I was talking about earlier. The probability of seeing at least X consecutive losing trades within a sample size of 50 trades. So we're going to go based on the win rate over a sample size of 50 trades. Okay, these numbers up here are pretty much talking about how many consecutive losses in a row that you are likely to get. And here's the percentage, the likelihood, right? So if you have a 50% win rate, you have a 97.1% chance of losing 6 times in a row. So if you lost 6 times in a row with a 50% win rate, that's normal. It doesn't really drop off to the 7th time, and it drops dramatically to 29%. And then the 8th time, it drops even more dramatically to 15.5%. And then the 9th time, it shouldn't even happen. It's 3.9%. Okay. So if you are able to have proper expectations and not get caught by surprise when you go through these losing streaks, then you can sit here and count and monitor each loss and make sure that they are probability-based losses. Probability-based loss just means that this is the natural loss rate, the natural and normal loss expectancy of your system, and you execute it perfectly for a fact. Now, if this is a trading error, right, a trader's error, a user error, then this cannot be counted. All right. So annotate your charts. Check off the boxes to each step of your system so you can know for a fact that you did everything that you were supposed to do, and then you can apply these stats. Okay. Now, fewer than 30 trades equals random dominates. All right. You can't really count that. 50 plus trades equals the patterns begin to appear. All right. So 100 to 200 trades equals strong statistical confidence in your win rate, risk reward ratio, and expected value. The bigger the sample, the more your edge emerges and smoother the equity curve. You're aiming for an infinite amount of high quality trades that you personally handpick to put in your sample size to make your edge have the highest possibility to the highest degree to reach its expectancy, emerge. All right. So here's some actionable steps here. Set a rule. I only judge my system after 100 flawlessly executed backtested trades. It's really supposed to be 1,000, but I'll give you 100. All right. You're only allowed to go on tilt after 100 sample sizes, 100 sample trades. All right. Review win rate, risk reward ratio, and expectancy monthly. There's 20 trading days in a month on average, I think, or something like that. All right. Use journaling to categorize each trade so you can compare apples to apples. See how similar each trading session is. Identify the characteristics of a high quality versus low quality trade, right? This is very important. You should be able to articulate and write down the actual signs that that technical analysis that these charts are giving you, these candlesticks are giving you, your indicators are giving you, that will differentiate high quality versus low quality. Like, as long as you have this gut feeling, that's all it's going to be, is a gut feeling. And you do want to I think that mastery when it comes to trading is really intuitive trading. But when people say I have a feeling or a gut feeling, that's not the same thing. A gut feeling is emotional and you're just eyeballing it. Intuitive trading is knowing something through screen time and experience that you just have not taken the time out to write down, to articulate, to teach somebody else. That's it. So it's something that is objective, but you just haven't taken the time out to articulate it. That's intuition. All right. So track your execution. 1 to 2 errors make up 90% of your issues. The Pareto principle, you do the same 1 or 2 errors, I guarantee you that if you could just check on a daily basis, and when I say check, I mean take these 2 trading errors, put it in ChatGPT, and ask ChatGPT to give you 2 daily trading goals to reach every single day. Okay? To help recede or subside these trading errors. All right. Number 3, the challenge with infrequent setups. If your setup barely appears, you never get enough trades for the math to work. All right. Rare setups equals slow learning, slow improvement, slow edge emergence. All right. So your edge won't really emerge like that because you don't have a lot of trades in your collection. All right. This is a numbers game. We need to trade as much as we can with a very proper risk. Right. You get rich by taking small risks, but a lot of risks. Okay. That's how people get rich. They take a shit ton of risks with a small amount of money. All right. Over and over and over and over and over again. That's what we're doing here. Emotional pressure increases because each trade feels too important. If you don't see your trade emerge often, you may be hesitant and you may be like, damn, like I probably have to size up. You know, this don't come too often. Like, you just put it on a pedestal. And at that point, you put something on a pedestal, then you're going to start treating it in a way that it doesn't need to be treated. So hard to know if the setup actually has an edge because the sample size stay tiny. That's a fact. Actionable steps. Expand your playbook to include 2 high quality setups that presents itself every day. I really like to say 1 high quality setup or 1 setup, but if that 1 setup is infrequent, you need to have 1 more setup in your back pocket, but do not go over 2 setups. You don't want 3, 4, 5, 10 plus setups. Like, then you'll start getting confused and then you'll see the market and you're like, okay, I see parts of setup number 1 and I see parts of setup number 7 in this one situation, but number 1 is, supporting a short bias and then number 7 is long bias and it's a coin flip. You don't want to be in that position. All right. Clarity of time comes with price, and only select 1 to 2 setups. All right. So choose 2 high volume instruments to increase the chance of your edge presenting. So if your edge doesn't present too often, have NQ and then have like YM or something like that, right? Have like 2 different instruments to trade. Focus on A setups, not perfect setups. A setups that is worth the potential loss. Doesn't have to be perfect, just worth taking a shot. If you see something and you're like, this is worth the potential loss. This seems pretty good. It's not perfect, but I do want to take a shot on this. I'm gonna manage my risk. Take the shot. Take it every time. There's been a lot of times I've been at a blackjack table and I see one of my homies have like a 20 and he stays, and the fucking dealer has like a 13 and that motherfucker hit 21, So you just never know. Every time you place a trade, like I said, wins and losses are wrapped up into one when you place the trade. You just never know which one is going to be which until one of your orders hit. In the market, there is no winning and losing. Technically, winning and losing is only our perception because we're placing a stop loss and a take profit. But the market is just nothing but a bunch of up and down ticks, regardless of wherever your stop loss and your take profits are. It was going to go there even if they weren't there. So therefore, winning and losing isn't necessarily a thing in the market because it would have did it anyway, regardless of which you identify wins and losses. So we have number 4, gambler's fallacy. Thinking a win is due after losses, even though each trade is independent. All right. So Mark Douglas said that this was one of the trading truths or something like that. And I think he said something along the lines of, and I might fuck it up, but each trade is its own independent event It has nothing to do with the last or the next or something like that. And that's a fact. Okay. Do not over leverage because you think the next one is more likely to win. That's how the market gets you. That's the old okey doke. Do not be a rookie like that. Wins and losses come in clusters randomly. And another thing with this before we move on is if you're already behind the 8 ball and you have a red day, right? Or you're red so far, you probably need to cut your size in half if you're going to take that second trade. Because at this point, you're not really trying to get a green day and chase green. What you want to do is just go half and then try it again to just in case you lose again. Losing should always be your priority, not chasing, green. So wins and losses come in clusters randomly. Exactly. You just never know. So you got to take every single setup that you can with proper risk because you just never know. I know there's been a lot of times where we see like a quote unquote A+ setup, clear price action, and next thing you know, it was too good to be true and you get stopped out. So our judgment technically isn't even good, to be honest with you. And there's a lot of times where we see choppy price action and I'm like, damn, market conditions are trash. Price action is choppy. I don't know if I want to take this trade, but the setup is there. So I got to respect it. Always respect it. Take the trade anyway. It might just chop its ass up all the way to take profit, even if it takes 4 fucking hours. All right. Go watch a movie or something. Believing you're owed a win leads to over leveraging, leading to revenge trading. The market doesn't owe you anything. The more you feel entitled, the more you will lose. Okay. Actionable steps. Treat every trade as a fresh coin flip with a long-term edge. Okay. Use fixed risk per trade. Never increase after losses. A loss isn't something you fight to get back. Just let go. It'll find its way back to you. Like I said from like early on, it's like you want to create an environment where trading success finds you. When I say an environment, I mean your mind. All right, your mind. You want to make decisions and you need to be good with or good without. And once you're just like, I don't really care, it's going to come to you. Just do what you're supposed to do and let the shit go. That's a life lesson, honestly. Know your system's loss rate and consecutive loss expectancy. People always talk about win rates, but they don't talk about loss rate. They always track their wins, but they don't track their losses. Try something new. I challenge you. Try something new. Start collecting your losses. All right. Start collecting them. Start trying to see and look at that chart that I showed you guys, right? I think it's on here. Yep. Look at this chart and make sure that every consecutive loss match. Damn, what was that? Make sure every consecutive loss pretty much matches these percentages and these are true. Because once you witness this, then at that point, you will gain trust. And if you gain trust, then you will gain more trust. Trust so much that you can trust this with your life. Therefore, you can actually trade for a living. Okay. The market doesn't remember your last trade. If the market don't remember it, neither should you. Let it go. All right. Don't have recency bias. Recency bias is when you take what happened in the past into the next relationship. Don't bring your dramas to the next person. All right. Like, don't bring what happened in the last session to the next session. I remember I went to this Tom Hugard event in LA, and Tom Hugard pretty much said that the reason there was this guy and he made it to number 1 golf spot. Like he was number 1 in the world or some shit like that. And the only difference wasn't necessarily his technique. It wasn't necessarily anything physical. It was the fact that, or maybe he asked Tiger Woods. It was one of those. Anyway, it was the fact that whenever they fucked up, they didn't think about it and they just went to the next, I don't know what's called in golf, but they went to the next try. They went to the next attempt. They went to the next play. All right. And I think football is similar too. Like they just do play by play, bro. Play by play. So 5, risk of ruin. If you risk too much, the math eventually forces your account to hit 0. So high risk equals higher chance of blowing up, even with a good edge. If the more trades you take brings out your edge, then one big gamble is what kills your edge. And if you don't have an edge, you won't have success. If the more trades you take brings out your edge, then one big gamble is what kills your edge. And if you don't have an edge, you won't have success. If the more trades you take brings out your edge, then one big gamble is what kills your edge. No edge equals no success. Okay. So just understand what game you're playing. Stay alive as long as you possibly can. And you do that by having proper risk. Also, when you have proper risk, you can take as many trades as you can. And the more properly and flawlessly executed trades that you take, the more your edge will emerge, because you are handpicking a high quality, high standard set of trades that meets your requirements, right? That you're proud of, that if you show anybody your journal and screenshots of your trades, they all look beautiful. Your edge will emerge to the highest degree. And then at that point, you will make money hand over fist and you will be successful. Okay. Actionable steps for this. Risk. How many probability-based losses until the account blows? This is something that I do because I trade prop firms. If I have a 50K account and my max drawdown is $2,000, then, and I have a 55% win rate, all right? And 55% win rate, there's a 97% chance that I will have 5 losses in a row, but I'll say I'm just going to say 6 chances of going on a 6 losing streak. Okay. So with that being said, I'm going to consider 20 probability-based losses. Understand it has to be probability-based loss, which means it's a natural loss due to your loss expectancy, not due to trading error, meaning I did everything that I was supposed to do. All my controllables, checked off all my boxes, and I still lost. Okay, that's a probability-based loss. This does not count if it's a trading error, a trader's error, or user error. So I'll divide 20 probability-based losses by 2,000, right? So I would have to lose 20 trades in a row in order to blow the account. And that means I'll be risking $100 per trade. And, you know, if I'm doing a 2R, I'm risking $100 to make $200. And if I do that 10 times, that's $2,000. 10 times, that's $2,000. I don't expect to win 10 times in a row, but over a certain amount of trades, and if I can average 10 wins, that'll be $2,000 if I'm just patient enough. That's the thing. All this requires, that number game requires patience. And if you cannot develop patience, and if you don't know how to sit there and be bored and be okay with not doing anything, and you got to do something, so therefore you start interrupting shit, you know, because you've been in corporate America for so long, or you've been working for so long that you always felt like that if you don't do something physically and you don't contribute, then something's going to fall off. Bro, you're going to fuck up every time, because that's not the same game we're playing. We got to let it go. Check off your boxes. Let the trade work. Don't worry about the how. Set your targets. Don't worry about how it gets to one of the targets, or if it gets to either one. All right. So use hard stops to cap every loss, and then ask yourself before every single trade. I want you to write this down, please. Please write this down. How much am I willing to lose to find out if this trade will work? By you answering this question, you will automatically accept loss, accept the risk, identify the quality of trade, reduce regret, and it subsides emotional volatility leading to tilt. If you ask yourself, how much am I willing to lose to find out if this trade will work? And I say, I'm willing to lose $300. Then at that point, I've accepted that I will lose $300. At that point, I've accepted my risk, and I've determined my risk that meets my, I guess, psychological or my mental ability to take loss. Like it matches my mental capital, right? And then by me answering this question, if I'm only willing to risk $300, say if I have a $10,000 account and I'm only willing to risk $300, then at that point, the quality of the trade is probably not that good, and you probably shouldn't take it anyway. Okay. And then it reduces regret. So if you lose, you're like, well, I already accepted the risk. I already asked myself how much I was willing to lose, and I fucked around and find out. All right. And then it subsides emotional volatility leading to tilt. And it does that because acknowledgement and acceptance kills surprises. Okay. So that's the lesson. We're done. And I just want to let you know that if you go back and watch this video and actually study this video is all you'll need in order to really be profitable, to be honest with you. This is the only video you need. I mean, it does get deeper as far as the psychological part of things, but if you learn to trust yourself and build good habits, right? Understanding that every trading error you commit is not you trying to make money, but it's you betraying yourself, right? Every time you're in drawdown and you stop abiding by your system and trusting your system to get you out of it, then you will never witness what your system can get you out of. So therefore, you will never begin to trust it. And if you never begin to trust it, then you will never trust it with your life. And if you can't trust your system with your life, you will never be a full-time trader, because that's what a full-time trader does. They trust their system with their lives. So I'll see you on the next one.